Hello, hello. Welcome in. Welcome in. We are back. It's summertime right now as we speak. I can tell I'm wearing my cute little dress. And despite all the cuteness that's going on between the two of us, Lacy, we are talking about something else that is cute, but not so cute, I guess.
Well,
Uh,
I don't know if most people, when you bring up the topic of insurance, it's not something that they get super excited to talk about. But when we start talking about infinite banking, of course, that's exciting. But today I want to talk about insurable interest. So we're going to put on our insurance hats today and talk about what does it mean when we say insurable interest. When an application is submitted, they want to know that there's an insurable interest. And what do they consider that? What do we consider? And more so to our listeners and our clients, what should you consider to be an insurable interest?
it's a very focused topic, actually. So if we go to the fundamentals of this, you think of a cross and you can insure one up, two down, and sideways. So at the top of the cross, it's like your parents. They're one up, like a generation above you. And then sideways is your spouse or your business partners. And two down is your kids and your grandkids. And those are the traditional people that most people will insure, the most common people you will insure. And that's like you have an interest in them. So if they pass, there will be an impact to your life.
Right. Like a financial or personal loss if that person were to die.
Exactly. We didn't mention siblings in there, but siblings can fall under the category of a business partner. It can also be a friend that could be a business partner or something you're doing an investment in, right? So if you had listened to our last podcast last week, and that was, I think, episode 115, we just finished talking about like, will you be sad or mad? And I was talking about just like that example of, my high school girlfriend, and she didn't have like a will in place. And what ended up happening was her family member had invested into her business and wasn't able to get that money back out because there was no actual proof. And so her common law spouse of 5 years decided, okay, well, I'm selling the business and that money's just coming back to me. So that speaks to the importance of insurable interest. Part of the reason that you wanted to cover it off on today, Lacy.
Yeah, absolutely. And I think just as I go in my day-to-days and we're out and about, I don't think my work brain really ever turns off. So I begin to, from the outside in, look at certain situations and say, man, I really hope that they have insurance on such and such, or this person, or this business partner, or this parent, or even spouses. So one scenario that comes to my mind is, what if you have two spouses that both make a significant income? So financially, you would be okay if you lost your spouse's income. So is there a need for insurance there? And some people would say, well, I'd be fine. I'd sell their business and carry on with my own, and away we would go. But the first thing is, do you have small kids, and would your childcare change? What debts would remain? And then most of all, if you're a couple and you're planning for those passive income years after you retire, those plans change quite a bit when you're just on one income but still have the same dreams and desires.
It's interesting, though, too, I think for a couple of different generations now, ever since the RRSPs came about, or even the whole government social programs around CPP and OES, and I can't remember what other social program is out there, we begin to rely on those sorts of incomes that can change at any time because the government can change their mind about what's available and what's not available, right? And with our current political environment here in Canada, like Lacy and I are both from Alberta. Now there's a whole thing where Alberta is looking to separate from the rest of Canada. How is that going to impact everyone else in the country in the sense of those that have made plans based on factors that they cannot control? And when I mention RSPs, there is no control over the actual return on investment that one makes. Same thing if you're during retirement, depending on if you're relying on a pension, that could also potentially change. And certain debts that might need to be taken on depending on what you own. You could be fully paid off on a mortgage, let's just say, but an emergency occurs. And if you don't have the right insurance in place, you might have to go back to the bank and get back into a mortgage to solve that issue. Like you said, so much can change.
Yeah, so much can change. So if we continue, there's a few different points, and we could maybe even go down to like we have insurable interest on our parents, but also our children can have insurable interest on us as
Mm-hmm.
well. So when we talk about farmers and ranchers, for sure, a lot of times we are in business with parents or relatives, and then our kids often come into the business as well.
Yeah.
So we do depend on each other financially and as business partners for getting the day to days done. And so a lot of times the insurance isn't put in place on the parents. And then what do we do with siblings that don't come back to the farm? Well,
Mm.
that's where a death benefit could provide a payout so that the farm stays in place. And I know we've talked about this lots, but just as a reminder, the farm or the ranch stays in place, it stays producing. That child who comes back and assumes all of the work of the farm or the ranch is able to give the off the farm kids their share
Hmm.
of what mom and dad have built. So that's one thing.
I don't think that there's a lot of people that get into a situation where we are assessing, okay, what do we all need to have in place before we start going out on a date? Or when you get into your 3 or 4 dates, okay, yeah, I really like you. Okay, so what are your finances like? What do you want? How many kids do you want? Are you open to insurance? How's your health? That's far too logical. And as humans, we're very emotional. That's the same way, like in many business partnerships, the idea of getting into business with each other is so exciting that you go where the spirit moves you and you start moving towards doing all the things that develop that business. And then a lot of people just come afterwards and then start developing the pieces that you're supposed to manage that risk. If it actually goes somewhere, then it's like, oh, okay, yeah, we should put insurance on each other. And talking about this, if you're okay, we'll use our own personal example, Lacy.
Sure.
So, in speaking from our own personal experiences, it kind of happened much the same way with Lacy and I. We got started and we just started doing things. And as soon as we started realizing this is going somewhere, then all of a sudden we created insurable interest in each other. Lacy has the capacity to put an insurance policy on me. I have the capacity and insurable interest in the eyes of law and in the eyes of the insurance company. We could do one on each other. Whether or not you believe in the power of insurance right now, what we're advocating for is don't take it for granted, because we could have done it a long time ago and completed this transaction between her and I. But guess what? Life happens. And we're waiting now for Lacy to get the A-OK. She's insurable because you became uninsurable.
Yeah, I became uninsurable when I was diagnosed with colon cancer. And now we're waiting time period that we know that the life company wants to see me being cancer free. And I'm over the 3-year mark. So we're getting there. It seems like time is fine. But in saying that, what are you waiting for? Don't wait, because I would say, could we have done it before I was diagnosed? Yeah, probably. We probably had grounds and knew kind of where this venture was going. But now that we waited, we're just forced to wait a little bit longer. You don't know what tomorrow holds, and you don't. Are you going to be insurable tomorrow? That's just a question that we don't know the answer to. And a lot of people live on risk. Well, I'll just take that risk and, you know, it'll be fine. Like, what's the worst that could happen? Well, the worst that could happen currently is I'm uninsurable, but I'm not going to be uninsurable forever. Don't sit on it, because in continuing the conversation about business partners, one thing that comes to my mind when you speak to, what if somebody has a silent business partner? So in the case of your friend,
Mhm. She was a silent business partner. She made an actual monetary investment into the business, and that's still an insurable interest.
And there's so
right?
many things it could be a one-time monetary investment into the business. It could be an ongoing agreement. So what if that silent partner passes away and there's an agreement for ongoing investment into the business, but then all of a sudden they're gone?
When you begin to understand who in your life is an insurable interest, then you are able to exercise a certain level of financial stewardship to manage the things that you've put your money into, your life energy into. It's not just monetary, but giving yourself every opportunity to take away the possible money going out the door if you don't need to. Because the more money we have, period, it just allows us to have more options to handle any opportunity, to handle any emergency in our life. Every other type of financial professional that is out there all basically come to the same conclusion that insurance is still the number one way to solve complicated estate issues. And yeah, it's the most cost-effective way to do it.
Yeah,
But
efficient and cost effective.
and I think what a lot of people take for granted or don't really understand that there's like a timeline to these things. You can only insure your parents to a certain age.
Yeah.
And
And I'll just
yeah,
say this. If you're
it,
40, your parents are getting to the age where they're running out of insurable years. I'll just say that because a lot of times we meet with people and it's like my parents are already 75. And I'm not saying age 75 is the cutoff, but I'm saying, you know what? When they were 55 or 60 or 65, it might have been quite a bit more appealing to you. So if you're 30 and you're in business with your parents, you need insurance on them. You need to look at it ASAP.
yeah,
Mhm.
sooner the better and the more cost effective.
Yeah. Because I know sometimes I would be like, am I actually this old? My parents are aging. I'm getting to that age where I have friends who've lost their parents. If you have friends who are losing their parents due to age, you should have had a policy on your parents a long time ago.
Hmm.
That's all I'm saying. Because one day we wake up and we're 80
And our joints start to hurt.
and things start to come up, right? And so, if your parents are healthy, look into it. Here's a question that I've been asked actually quite a few times just out and about is, hey, I heard that you can just put insurance on anybody you want. Is that true? Like I could just get a policy on my neighbor. I'm like, no. So why can't you insure just anyone? Well, insurance companies, like the goal is not to profit from somebody's death. If you're going to, like we said before, suffer a significant loss or impact because of that person's death, then yes, you can potentially have a policy on them. But if they're over the age of 16, you have to have their consent here in Canada.
Hmm.
So
You
you
have to
can't
have
just
their
put an insurance policy
signed.
on somebody without them knowing, even if you have insurable interests. So let's clear
Mhm.
that part up.
There is a distinct difference of like, okay, you understand who could be an insurable interest for you. Say for Lacy and I, she wants to insure me, but I still have to give her permission to do that. I still have to sign off on that. And same vice versa. I would like to get insurance on Lacy, but she has to sign off on that too. So
Yes.
it's very much mutual consent in order to make that happen.
hmm So we put on our insurance hats and we're talking about, hey, I don't know if you know, but do you have your business partner insured? Do you have your spouse, your kids, your parents? But how do we tie that into infinite banking, really? Because we see whole life insurance, participating dividend paying whole life insurance valuable while we're alive and not just whenever there is a death. So it protects families that we work with, businesses. It creates that accessible pool of funds that we always talk about, contractual guarantees that you speak about quite often, Winnie. And it just gives us a place to create and preserve wealth while we're
Mhm.
alive. The death benefit is the foundation that allows all of those living benefits to exist. So I don't know if you want to speak to anything about how it can tie into IBC.
So the infinite banking concept, when we say that, it is a mindset, not a product. It's a mindset. It's a foundation of principles used to apply into our cash flow management, how we handle our finances on the day to day. On the personal side of things, The infinite banking concept used on the personal side of things is for helping us to keep more money while we are living for everything that we're going to spend our money on. So depending on your season of life, if you're a singular person and you don't have a family yet and you're not really considering the lifestyle of a family, well, think it just, if you were single for the rest of your life, how many vehicles are you going to get? How many trips are you going to go on? How many things are you going to replace? Are you going to get a house? What kind of toys do you want to get? So there's only so many dollars to go around in a person's cash flow from one season to another. Some seasons you're going to be making more, some seasons you're going to be making less. So always in consideration, I guess, whether you're living a personal life or you're thinking about this for your professional life, there's only so many dollars in your cash flow. And so quite often, most people will think, I only have so much money to put towards insurance. And then there's only so much money I have if I want to invest it so I can grow my money. So really to think about this in an even more succinct, efficient, strategic way, infinite banking is really smart because you can get both the permanent insurance that you will eventually need anyways. And the sooner you do it, it's going to be more cost effective and so much more better for you. And then you got the power of compounding working in your favor, so on and so forth. It is lovely because, again, you don't have to feel torn, like, do I save money or do I do some insurance? Do I invest money or do I do some insurance? Or do I buy insurance rather than put money into my TFSA? I mean, again, I'm thinking about for those of you who have known nothing about the infinite banking concept and are living more the traditional sense. Same thing, whether it's for your personal life or for your operations.
Yeah.
There's only so much money to go around towards everything that you have to spend money on. And there's so much more if you're a rancher, you farmer, so many more dollars goes out the door and with bigger zeros than the people who live in the city.
Absolutely. If you love someone or owe someone, you need insurance. But here's some questions for you to ponder. Who depends on your income? Would your farm survive without you? Would your business partner be able to buy your shares so that they can continue on? And would your family have enough liquidity if something happened tomorrow?
I have one more. For all of those parents who are staying at home and not taking a paycheck, you're still an insurable interest because the value that you bring to the home, although you don't have like an actual paycheck, it does have a monetary value. If you not being here and you not doing what you're doing, how much would your spouse have to pay in order to replace you?
What do they say? Stay-at-home moms would be one of the highest paying positions if they received a paycheck because you're a maid, a chef, a taxi driver, a caregiver, like all these things. So think about those questions and answer them. Do you have coverage on the people that you should have the coverage on? Because insurable interest, it's not just a requirement from the life companies. It's really the reason why life insurance exists in the first place. It's a tool that remains for protection, not speculation. And we have been diving into some fun facts in our weekly team meetings. And one of those fun facts was like the history of life insurance. And when we talk about insurable interest, I would have to go back to our team member Noemi and ask her for the notes. But a lot of the wealthy people who were aboard the Titanic had life insurance. And there was she had the statistics of how many claims or the monetary value of the claims that were paid out. And the actual Titanic itself was insured.
Well, maybe we can, not maybe, how about we invite Noemi to come on next time and she can share it because she presented it so passionately
Yes,
to all
you
of
did.
us.
Yeah. Yeah.
So
And
we'll,
so we should. Yeah. We will invite her. We will see if she will agree to that. So when you understand insurable interest, you begin to see life insurance differently, not just like another insurance conversation. Let's not gamble on death or when it's going to happen. Let's protect your family and your business and the people who depend on them. Because heaven forbid that day something happens and you not be prepared. So that's our bit on insurable interest. So if by the end of this episode you have realized somebody who you have an insurable interest or somebody who you know you should have insurance on, slip into our emails because we're here to help you and guide you.
Mm-hmm. And at least help carry the conversation. Sometimes it's like you can plant the seed and let them know. It's not up to you. We don't want to make you feel like it's up to you to explain the nuance behind it, but hopefully this episode has helped and maybe you can share this episode with that person.
Yeah, absolutely. So you know where to find us, ranchyourway.com. That's where you can begin your journey by purchasing Farming Without the Bank. You get the paperback copy and the audio version. The audio version is a game changer. If you're in the tractor, I know a lot of people are going to be doing their second cut of hay soon. Perfect time to take in that audio book. Leave us a 5-star review over on Apple, Spotify, iHeartRadio, or YouTube. Bye, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.